is you had the highest revenue per dispensary of all the multi-state operators. Without, I guess, giving away too much, like, what are you doing differently versus, say, some of the competition? Hey, everyone. Welcome to our latest TDR Cannabis exclusive short week as it's Thanksgiving. We're pretty much wrapped up all of earnings season. A lot of companies reported, but one company in particular that a lot of you viewers have come back with, and I think in some ways stole the show, is our next guest here on our podcast here today. He is the CEO of Ascend Wellness, which trades on the CSC under the ticker symbol AAWH-U.CN and on the OTC under the ticker symbol AAWH. John Hartmann joins us for the first time. Good to see you. And before we start recording, sounds like busy times. You just opened up a dispensary in Illinois, and that's where you are today. So how are things?
Things are fantastic. Really appreciate the opportunity to join you both today.
Yeah, it's very good. A lot of positive sentiment before we get into earnings, but needless to say, this is a stock that has done very well performance-wise amongst a lot of investors over the last couple of months. But a lot of the questions that we're seeing, we were actually in New York last week speaking to a number of executives, including some lobbyists too, but 2024 could be a very interesting year for this industry, don't you think?
We are very excited. Look, at Ascend, we're very excited about running our own playbook, and we think we'll get some help from some friends along the way. So right now we're focused on a strategy which I'd love to share a little bit more with you about in the coming few minutes. But it's a playbook we're proud of. As you mentioned, we opened our 32nd dispensary today.
32nd. Wow.
In the western burbs of Chicago. So very excited about the progress the team's making at Ascend.
Be nice to get some help from some of those quote unquote friends, wouldn't it?
It would be. There's a lot going on, federally, there's a lot going on in the states that are our current markets and others. So we're excited about what's to come.
Anthony Varrell, good to see you again, sir. Let's jump into some of these numbers. You earned a net revenue of $141.3 million, a 27% increase year over year, an impressive 14.9% growth sequentially. You also generated 13 of positive free cash flow, the first time it has done so in the company's history. So break down what went right this quarter.
Look, this is a stair-steppy business, as we like to say. The team has made some fantastic investments over the last several years, and I think what you're seeing is the payoff of those assets being deployed appropriately. So if you break it down a little bit, record top line, record profitability, and most importantly, what are our investors looking for? They're looking for continued growth of the top line. They're looking for us to leverage our assets, driving not only solid EBITDA dollars, but also improving the margin along the way, and then being able to stand on our own 2 feet. And after 3 consecutive quarters of positive cash flow from operations, for the team to deliver positive free cash flow for the first time, as you pointed out, $13 million in the quarter. It's a huge milestone for the company.
Huge milestone. Anthony, I know you had some key questions.
I'd be willing to say it was an understatement that everyone was shocked when you pre-announced and we saw that big headline number. 27% growth year over year. I mean, it's pretty impressive. What do you attribute that to? You're in Illinois and Michigan, which are two of my favorite markets that I know we've had some growing pains. Is it normalization in those markets as well as what we're seeing in Maryland that attributed to that?
Yeah, look, it's actually for us 3 key components. I'll start with retail. So our retail business grew 13% quarter on quarter and 22% year over year. So we broke $100 million in the quarter in our retail stores, and that represents about 3/4 of our overall business. Anthony, 72%. We are excited about the initial growth we've had in our 4 dispensaries in Maryland, and it's probably a perfect segue to kind of reinforce what was mentioned up front. That's running our playbook and the strategy of the company. Maryland is a perfect example of the company focused on late stage medical markets, early stage adult use. The team, before I joined the company, acquired these 4 stores in Maryland, closed on the acquisition in mid-April. I joined the company in May. Obviously one of our early to dos on that list was to get these 4 stores ready for adult use on July 1. So the
Yeah.
team did a phenomenal job, rebranded, new technology, hired up new teams, and opened the doors on Saturday, July 1st. And we're very pleased with that addition to the portfolio. But and then as I mentioned here in the kind of I'm currently today just north of Chicago, and we just opened our 10th dispensary in North Lake, Illinois today. And so we're super excited about that, being able to share that news with our local customers and the broader teams as well.
We've talked about growth states on this podcast, but man, numbers that are getting produced in Maryland. I know it's been live now, as you said, for 5 months now, but has the market, I guess, maybe overperformed your expectations? Like, it's been off to a great start, to say the least.
Look, it's actually the team's original projections were that the transition from medical to adult use in Maryland would fall somewhere between 2 to 2.5 times the medical sales, and we're tracking right down the middle of the fairway.
Yeah.
So, I think the team did a wonderful job of projecting the possible benefit of the adult use flip, and I think we're right there,
Yeah.
and we're very excited about continuing to see that build on itself week over week, month over month.
One metric I found most interesting is that based on the public available data, is you had the highest revenue per dispensary of all the multi-state operators. Without, I guess, giving away too much, like, what are you doing differently versus say some of the competition?
Look, it's something I'll take zero credit for, and that is the strategy of the company has been to identify high profile, high traffic areas as they've laid down the real estate portfolio for the company. And one of the things that most enamored me about Ascend, looking at in from the outside when I was considering taking the CEO role, was just the deployment of assets. So I think capital allocation is so critical, particularly in a growing, really in a brand new industry, in a growing industry. How you deploy your capital is critical, and I think the identification of really great locations, and then just running great retail is that's the secret sauce. Having a great location and then pleasing your customer every day. That's what keeps the traffic returning to your store.
Yep, we saw that
Yep.
firsthand last week.
And I know that, John, you've been with the company since May. Obviously, we're by all the key metrics. I mean, things are on the rise. And I mean, your background with Bye Bye Baby, with True Value. For those that don't know, can you guys just walk us a little bit through your background and how being at those companies and being in those positions is setting up Ascend for you to kind of deploy key learnings across the enterprise as a cannabis business?
Sure, I'd be happy to answer. I think simple explanation is the best. If you look at my background, it's largely retail, wholesale distribution, and a touch of manufacturing.
Yeah.
And I've had the great opportunity to work in some really big companies like Home Depot, like Cardinal Health on the pharmaceutical distribution side, which is where I started my corporate career. Also work in smaller companies. True Value, Bye Bye Baby was a $1.5 billion company. And I think that the common theme that runs through them is appropriate capital allocation. And many of them, particularly the small, not Home Depot, not Cardinal Health, but many of the smaller businesses, an intense focus on the financial fundamentals.
Yeah.
How are you leveraging your assets? How are you getting more out of our cultivation and production facilities? As Chad mentioned up front, how do we continue to lead really important high numbers out of each of our retail locations?
Yeah.
And I think in cash management, cash is so critically important to these growing businesses right now. I think our 3 quarters of positive cash flow from operations, a critical milestone for us, getting to the point where quarter after quarter, year after year, that we're positive overall from a free cash flow perspective. I think these are experiences that I've had in the past that I believe will support my team and how we manage the business for the next few years.
When did you say you joined? What was it, earlier this year? What month?
In May, I joined Ascend in May.
What'd you see, I guess, as far as, I don't know if the right term is opportunity, but what needed to change for you to look at an opportunity and jumping into this kind of role that you're in now?
Look, I think for me, what we just talked about. At this point in my career, the important thing is the match between what I have to offer and what a company needs. So when I think about, we haven't talked about wholesale, and I'd love to talk about what our wholesale
Definitely.
team's doing. But our wholesale business at Ascend is growing rapidly, as nearly as fast, in some ways, if not faster, than our retail business. Having that wholesale experience is critical for me. Manufacturing, I mean, look, I've never been involved in a plant manufacturing business before. Obviously, that's a new piece for me, and I've grown an immense respect and admiration for what our team members do in our cultivation and production facilities, in the 6 of the 7 states that we're currently vertical in.
Yeah.
Just immense respect, and I've stood there, room by room, stage by stage, and done some of the hard work alongside them that it takes to produce this amazing product. And I think, but fundamentally understanding manufacturing, understanding production, understanding wholesale and retail, I think was a critical decision making point for me around joining the company. And then, of course, the plan that our founders laid down around focusing on late stage medical, focusing on early stage adult use, and it's a strategy that the company has stuck to. And focus is a really important personal goal of mine, and I love the focus this business has had on these 7 particular markets we're in today. We haven't kind of done the shotgun
Yeah.
effect that many others have. And look, all the power to them if they can pull that off. What's right for Ascend is to focus on these very specific markets, and I think Maryland most recently is a perfect example.
Yeah.
I mean, speaking on wholesale, I mean, back of the napkin math, I would assume your wholesale business is about 18 to 20%
Yep, good,
of your revenue.
good job on the math.
Around there is
No,
that
it's about 28%.
okay? Is that paramount when you're looking at markets to enter? For instance, like would that be a detractor from a market like Florida that does not have a wholesale market?
Look, I think Florida is in and of itself a unique market, and
Yeah.
we're watching it close. We're watching it closely. Whether you're vertical there or not, or can't be vertical there or not, I don't think that would necessarily preclude someone from making the decision. Many people are already there. I think for us, where it makes sense, that vertical integration has really worked well. And then in certain markets where we are producing and manufacturing more than we need for our own dispensaries, then we've also taken the additional step to get deep into wholesale. And for us, that is primarily Illinois, New Jersey, and Massachusetts. And the team is, you've done the math. The team delivered 21% quarter over quarter wholesale growth, and that's 41% year over year. So they hit $40 million of net wholesale sales. So that's not intercompany. That's fully to third-party dispensaries in the third quarter.
How are
And
you
then with
doing it?
favoring with favoring that vertical model, I mean, do you plan to go vertical in a market like Maryland?
Yeah,
we stay with the retail for now.
we have some M&A activity underway.
Okay.
It's public, so I'm not disclosing anything inappropriate. We have some M&A activity underway around manufacturing and production capability in Maryland. In the meantime, we have exceptionally positive partner relationships that are supplying our stores until such time as we have the capability, either through a partnership or on our own in Maryland, to do that. But
Yeah.
in the other 6 markets that we're in, we're already fully vertical.
Yeah. Big news out of Ohio 2 weeks ago. Bet you like that news, didn't you?
It's really great news. I mean, whenever the people speak and it's favorable, it's great news. And it sounds like the what's reported in media from the government of Ohio, it looks like there aren't any surprises in store for the eventual rollout, which we expect will be sometime later next year. Perfect timing for us. We have 2 great dispensaries currently in Ohio, and we have 3 that are under construction, will be open before Christmas or be open before the holiday period, and
So
certainly
that
before.
soon. So you'll bring that up to 5 in the next month.
Yeah, we should, by Jan 1, we should have our Piqua, Sandusky, and our downtown Cincinnati new dispensaries open in Ohio.
Okay. So, I mean, we talked to a lot of CEOs in the space. I mean, everyone's obviously very enamored with the tier one, tier two MSOs. Like, from an investment perspective, or I guess from a messaging standpoint, like, what sets Ascend apart from the rest, or what should investors be focusing on when they're looking at it, when they're looking and evaluating Ascend from an investment perspective?
Look, I think I would, as an investor, and I am one now. I would always start with the strategy of the company, and if you look at the the discrete portfolio of assets the company has put together over the last 4.5 years, it's a very impressive one.
Yeah.
And when outsiders are quoting the fact that our average revenue per dispensary is the highest in the industry of any U.S. based cannabis company. I think that's a sign that the company knows how to identify great locations and then run them properly to satisfy the customers. And then I would look at sequential growth, quarter over quarter, year over year, both at the revenue line and at the profitability line, at the EBITDA line, adjusted EBITDA line around profitability. And then how can you not assess an investment without looking at the cash flow of the organization? Yeah. So I think all the key financial fundamentals we're ticking the box. We've made some very substantial investments. We have a pipeline of new stores coming, not just the today's that open in Illinois, the 3 that are opening this coming month in Ohio, but we have a pipeline of additional growth coming for 2024. So I think those are the things that would be attractive. And then I'd look at the independent financial analysis that the investment community provides around the guidance and the value of our stock. And I think those are things that would lead me to want to invest in Ascend Wellness.
Yep. And with those high efficiencies that we're seeing at retail, within those numbers, I mean, how much are you attributing it to brand power versus like streamlined ops?
Look, I think the majority the majority of it is both the brands that we sell and the service and convenience that our dispensaries are providing. So it's a mix. We have our own brands, and I'll talk in a minute about a new brand that we've just launched in the last quarter, Royale. But we have great brands. We are growing, and producing fantastic product in the 6 states where we're vertically integrated, and then we're like Maryland, where we're not. We have great partner brands. So if you look at our menu, we have a very diverse menu. Yeah. It's clearly resonating with the cannabis consumer around having the choice, and then the different price points, whether they are an everyday good weed customer, or whether they like kind of the middle of the road, or they're a premium cannabis consumer. And in that regard, we've just launched a brand new brand, Royale, which is our super premium flower product in both Massachusetts and Illinois. The first couple of strains have dropped, and this is a really important and unique change for us. We're very proud of it. I'll share with you just briefly. Typically, when you see, if you look at other dispensaries, including us in the past, you could see a strain at a good, better, and best price point. You could see the same strain with different THC levels being really the sole differentiator of the product. Okay. We have acquired and grown unique strains for our super premium flower, for our super premium brand Royale, that are unique for us and only found in that brand, and they're unique because they're higher THC, so 26% and above THC, and they have a minimum of 2% terps. So it's a terrific for the consumer that is chasing that kind of overall, full entourage effect from the product. We're able to offer that, and we're not sharing those strains across our other brands like Simply Herb.
That's smart. That's how you build a brand, right?
Yeah, so I think it's safe to say that you've got a pretty good cultivation staff that's done some serious pheno hunting to accomplish those goals.
Yeah, they have a lot to be proud of. It's a great team, and hey, look, and we're not without our.
You know what, John? Though we've had a lot of executives on. I've never answered that question that way, but that actually is just like it's like daylight coming in. That absolutely makes sense when it comes to branding.
Yeah, it's like It is branding 101. It's like, be unique and then stick to your guidelines and your standards so the customer knows exactly what they're going to get every time they pay their money.
Yeah, makes sense. Timing's everything, right? When I listen to you and you look at your founders and advancing the portfolio over a certain period of time. So a lot of stuff that they've done in the past to set you are today, but now you come in, segue in May with a big background, like you said, in wholesale, where you're absolutely killing it right now. So, um, this industry, as much as it's moved fast for investors, it takes time, but we're seeing an evolution that is slowly but surely happening, and really the growth of an overall industry, right?
No, I think the best is yet to come. I believe that the Ascend team has an immense amount to be proud of. I say that every opportunity I get, both internally and externally. But I'm not here about what has been. I'm here about what can be.
Yeah.
And my mandate from the board is to continue to drive exceptionally profitable growth for the company. Continue to be very mindful about how we deploy our capital, both in the form of growth capex and otherwise, and how we manage our cash to ensure that we can stand on our own 2 feet, and we have the income every year to continue to sustain our growth. So I think there's a lot of good to come, and there's a lot of opportunity for us as a team to get better at what we do.
Yeah.
So with I got to ask, I mean, the markets that you're in from an adult use perspective, I mean, you could argue you're in some of the strongest adult use markets in the country right now, headquartered in New York. Are you taking a wait and see approach to New York, or any plans to enter the
Look,
state?
I'll just share a personal story with you. We were in New York. I was in New York with our board just a couple of weeks ago for our quarterly board meeting. The following day, we did our earnings call. Abner, Dan, and I, and my colleague Rebecca did our earnings call from New York. We just take a break and go outside from the office and walk around the block. You can buy cannabis anywhere in New
Yeah,
York.
We
we
were
were
there
there
last
last week.
week. We saw that.
Yeah,
And it's a perfect example of how not to do it.
yeah,
So the answer to your question is, and look at the markets we're in, as by your words, excellent markets, late
beyond.
stage medical,
I
yeah,
mean,
late stage medical, or very early stage adult use, and we love the markets we're in.
Yeah.
We don't like what we see happening in New York today, and for us, it's at this time, it's not the right play
I
for
will
us.
say this though, we saw a lot more of those dispensaries, black market dispensaries in August when we went, Anthony, and compared to like what we saw last week from what we saw. But I could be wrong, but I don't know how many was there, 1,500 at one time, illegal dispensaries in
I mean, they
Manhattan
were
alone.
still they were still rampant, and I mean, I could fully understand rationalizing staying out of New York for the time being.
Yeah.
I mean, it doesn't look like anything short of a good place to burn money right now. That being said, I'm sure it'll catch its bid, and I'm sure it'll get some sort of normalization. I mean, that being said, I'm assuming PA is a very exciting market for you guys moving forward, if
Yeah,
and
we,
when
we're
they can get it together.
Yeah, we love Pennsylvania. Hopefully, it's the next Ohio. We have 2 great dispensaries already operating in Scranton and Wayne, Pennsylvania, Northeast and Southeast, and we've got four under construction in the state. So like Ohio, when the time is right and the people talk or the government talks, and we get the adult use in Pennsylvania, we'll be ready to
I
go.
think they opened up a lot of people's eyes. Ohio did with the news from 2 weeks ago as to what's going to happen in Pennsylvania, but they got to get that done, right?
They do. They do need to get that done.
Are you at MJ Biz next week?
I will be there next week for a couple of days. I'd love to say it's going to be this great stroll in the park, fun in Las Vegas. I think my team's got me every 5 minutes is accounted for via the calendar, so it
Yeah.
should be it'll be fun.
That's if you can make your way around the city. From what I've heard, the F1 race is done and cleanup is underway, and it's supposed to take a full month. So timing's not the greatest for us, but what else is new when it comes to cannabis? Nothing comes easy, but most importantly, we will persevere one day, right?
We will.
Yeah, we'll
John,
go through it.
appreciate the time. Keep up the good work. Great numbers. We've had a lot of viewers reach out to us, but hopefully our viewers get good feedback from this interview here today. But yeah, keep in touch because there's a lot of people interested in your story, and job well done.
Thank you both very much.
All right.
Appreciate
Thank you
your
for your
time.
time.
Thanks, John.
Take care.
Hey everyone, so what'd you think of the video? Leave your comments below and let us know your feedback. We'd love to hear from you. As usual, subscribe to our channel by clicking on the link here. If you want to see more videos like this, then click on the link here and click on that bell for all notifications. Because most importantly, we want to know your feedback because we wouldn't be here without you. Thanks for watching, everyone.